All right, hello everyone. My name is Manolis Finarolakis, the founder and creator of RealityCrowdTV, and I have the pleasure tonight to be with Brian Korn from the law firm Pepper Hamilton. Thank you for joining us, Brian.
Thanks for having me.
Excellent. So Brian actually has been involved with a lot of the SEC regulations that are coming out as a result of the 2012 Jobs Act. And Brian, I'd like you to just put in layman's terms what this Title III crowdfunding law is. If you could put it in layman's terms for people to understand it.
Sure. So Title III refers to the exemption from SEC registration that allows people to go out and do crowdfunding to the general public regardless of the income or net worth qualifications of investors. There's currently something out there called Title II crowdfunding, which allows you to go out to investors that have a $200,000 annual income or $1 million net worth. What Title III will do is allow and open up crowdfunding really to the entire general public.
Wow, and what are the statistics of how many accredited investors are there versus how many investors is this opening it up to? Do you know those statistics?
Yeah, so the SEC estimates that about 7% of the US population are accredited investors. That means that there are 93% of the people out there who do not currently have the opportunity to engage in equity crowdfunding or investing through crowdfunding means.
Wow. So 7%, that's so from 7% to 100% essentially.
Exactly.
That's huge. And I'm going to make it very simple, and I want you to tell me if you agree with it. Would you say that they're kind of creating some sort of exchange or a stock market for private companies? Is that kind of what they're doing?
Yeah, well, I wouldn't really call it an exchange because it's not something where people are going to be able to trade securities and have liquidity. But what they're doing is they're enabling private companies that don't have access to mainstream venture capital, don't have access to mainstream funding, and even don't have access to Title II crowdfunding because maybe their industry is not something that's a mainstream investment topic. They can still now go out to the general public, test their ideas against the marketplace, attract investments from ordinary people, and those people will have access to earlier stage companies in a way that they never had before the Jobs Act.
Interesting. And so you mentioned that it is sort of like it, but it's not completely because as the law stands currently, there is no free trade. There's certain restrictions on how you can sell your shares that you buy. So are there companies right now working on that problem? Are they thinking of ways to make it more liquid for people to exchange shares?
So in a number of different areas, the problem of liquidity for non-public companies has been around for a while. You have companies like Second Market where you can buy shares in a company before it goes public. You also have the ability to trade shares in a Title II crowdfunding because essentially those are private placements, and as long as you're a qualified investor in a Title II world, in the accredited investor world, you can do that. Under the Jobs Act and under the SEC rules, there is actually going to be a one-year restriction on sales of crowdfunding shares and that are done under Title III to the general public. So in a way, the investing public is getting a slightly worse security than somebody who's accredited who might be able to sell their shares right away. The comment period, which expires on February 3rd, will essentially have to deal with that. The SEC release isn't all that clear on what they mean by keeping things restricted, whether you can send shares to friends and family, whether you can give them away as gifts, whether you'll be able to trade them to investors who are accredited. It's pretty clear that you probably will be able to do that, but it's something that the SEC needs to consider and finalize in the rules.
Which is really interesting to me. I mean, right now, because of the legislation, there's a lot of gaps in the legislation and there's a lot of unknowns, so it's also new. But if companies, the purpose of a company is to solve a problem. If there's companies that sprout up to solve those gaps, which we're already seeing across the industry, there's amazing new companies coming in to help with the compliance considerations, to help with the accounting costs. Maybe there's going to be a streamlined auditor coming through. So there's a lot of things that could happen, but you're right, there's a lot of unknowns. And tell us about Pepper Hamilton. How can you help people who are looking to crowdfund, or how can you help the service providers in the industry who are looking to actually establish a crowdfunding portal?
Sure. So Pepper Hamilton is a major global law firm. It's been around for over 100 years. We have 13 offices in the United States, over 600 lawyers. I specialize in corporate and securities and capital markets offerings, especially in the crowdfunding and startup world. Also, I work on peer-to-peer lending. We can help platform providers, and do have clients who are platform providers, people looking to start platforms, people looking to invest more efficiently in platforms. We have investors from overseas who are looking to start tax-efficient funds in order to invest in different crowdfunding platforms. So we really run the gamut from the platform and entrepreneur provider, the company that wants to raise money through a platform, new types of media that are going to assist people through internet and mobile means, and really all the way to the investor side and making investor and investor engagement a lot more efficient.
Very interesting. So you guys definitely provide a lot of good services to the industry, and I'm sure everyone is very grateful for your services. Now with the comment period, have you made some comments yourself, or are you working on some comments to submit to the SEC?
Yeah, so I'm working on 2 letters right now. One is as part of as a board member of the Crowdfunding Professional Association. We have about 5 bullet points that we're going to make in a short letter. The other, I'm on the American Bar Association section of business law, where we're preparing a much longer form comment letter. Part of the challenge of a release like this is that they asked over 100 questions about different variables that could go into the final rules. So while the broad strokes of crowdfunding are more or less known as they were in the Jobs Act, it'll be interesting to see how the SEC responds to the comment process and changes the rules from what they proposed in the October rules proposal.
Very good. Well, there you have it. This is Brian Korn from Pepper Hamilton, and thank you very much for joining us today.
Absolutely. Thank you very much.
Great. Thank you so much.